Welcome back to another episode. Today we're going to take a quick look at Draftkings. This company, like many growth stocks, has fallen to crazy levels. It's down over 70% from its 52-week highs. And on today's episode, I want to talk a little bit about the earnings and also why I might be bullish in the long term for this company. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. So Draftkings has recently reported their fourth quarter revenue Friday, February 18th, so about 4 or 5 days ago. Unfortunately, they did miss on earnings per share. We're going to take a closer look at those earnings reports, but they did beat in revenue expectations. Stock price is obvious, did not like the results. We can see in the past 5 days, Draftkings is down about 16.2% alone. But if we take a quick look at their overall revenue, they did revenue of $473 million. That was up 47% year over year growth in quarter four. They also did see strong growth in their average revenue per monthly unique players, and that was up 19%. So that's how much your unique players is spending on DraftKings platform. Like I mentioned, up 19%. And the number of monthly unique players was also up 32% compared to the same time last year. So overall, this is still seeing huge growth. The company also reported that they're seeing great organic strength in the same states that they were before. For example, in states that they were last year for online sports betting, it grew 65%. And from same states that they had last year that had iGaming, which is online casino, was up 61%. In the past few months, they've also launched into new states, New York and Louisiana being some of the biggest ones. And just to mention, right now, they are only in 36% of the United States populations for online sports betting. I believe it's 17 states. And in online iGaming, which is online casinos, they're only available in 5 states, which represent 11% of the United States population. So right now, they are still very early on to kind of grow in this market. Right now, this is just in the United States, but when they continue to expand internationally, we can see where there is growth potential for this company. So DraftKings just finished their fiscal year of 2021, but they did give guidance for fiscal year of 2022, and they did increase their guidance for the full year by about 7% at midpoint. So previously they were expecting about 1.7 billion to 1.9. Now they're expecting about 1.85 to 2.0 to about $2 billion. Overall, that equates somewhere between a 43 to a 54% year-over-year growth. So we're seeing still strong double-digit growth for next year. And like I mentioned, this is about a 7% increase compared to previous guidance. So unfortunately, though, DraftKings, I want to say a few of the biggest things is this is a company that's nowhere near profitable at the moment. If we take a look, they expect 2022 adjusted EBITDA guidance to be a loss.
Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video.
Between 825 million to 925 million. This is a bigger loss, a way bigger loss than what analysts expecting. I do believe this is what really caused stock price to drop down. They do mention that the company would expect to generate positive adjusted EBITDA in the fourth quarter of 2023. That is many years. That's about 8 quarters from now, so that's super far from now on. But still, it's great to at least have some form of time frame of when this company is expected to be profitable. So obviously there are some good things with DraftKings right now, right? That heavy growth, but obviously they have some bad things, which is that overall expensive player acquisition cost and the overall that they're not profitable at the moment. At the moment, they're also focusing in a lot of great kind of technology to make their experiences for players better. For example, example, one of the things that they're doing is flash bet. So right now you have your typical betting. Hey, I bet for this team to win this game, but they are kind of working on their technology to kind of have bets in between games. Like, hey, who's gonna score the next point? Who's gonna do the next foul? Something that's gonna happen within the next few minutes. They're kind of offering these bets that, hey, are gonna have players play more often, right? They're also working on creating more of a social platform, which I think is kind of cool. DraftKings, they want to bring the social aspect of betting and gambling to players, so you can either showcase your winning, showcase your losing. They're also even working ways to kind of be able to live stream your bets and stuff like that. So they're trying to make it a content creation platform as well. I know one of the things that they're also working is share betting. So let's say maybe you and your friends or your parents or families, you guys want to do a huge bet together. You can all pull up together with different accounts, pull into one bet, and then kind of work from there. So that's also pretty cool. Finally, DraftKings has on November launched a loyalty program. I know most gambling places have a loyalty program, so it was crucial for DraftKings to kind of see this, and they are seeing great results at the moment. Like I previously mentioned, they recently just entered New York, and it took DraftKings less than 24 hours to acquire 100,000 first-time paid bettors, compared to 17 days in Arizona, 170 days for New Jersey, which is one of their most mature and strongest markets right now, 312 days for Pennsylvania. So you can see the overall demand right now in New York is super strong. There are a lot of high taxes in New York, which a lot of companies are kind of worried about. During the earnings call, management did take a question here, and they did mention that, hey, just like any other state, we are kind of working on the model for us to be profitable within the next 2 to 3 years after entering a state. So again, they are seeing huge traction in New York. Like I mentioned earlier on in technology, DraftKings is also focusing on becoming form of like an NFT leader, or at least a Web3 leader to some extent. Recently, they did partner up with the NFL Player Association to kind of create a gamified NFT collection, which should be available during the marketplace of the NFL season of 2022 to 2023. So that's going to be pretty cool to see, especially since DraftKings has huge backings with really good players like Tom Brady and Tony Hawk. Here they talk a little bit about that 2 to 3 year gross profit payback period. They ended the quarter with $2.2 billion of cash on their balance sheet, and as a reminder, they used their primary use of capital is to fund state launches, and under almost all scenarios and state launch timing, they have sufficient capital to achieve positive free cash flow. All right, so there's definitely a lot of good and a lot of bad in DraftKings. I want to say mainly good, right? This is a company that's growing at strong levels. It still has huge markets to expand into. It's still improving its overall technology and focusing on cool products like social aspect, like video content creations, like NFT, and just ways to kind of bring a whole kind of strong community to its application. So I think DraftKings in the future has a long-term potential. I do believe in the short term, because it's still nowhere near profitable, it's going to be very volatile. At the end of the day, DraftKings is in my portfolio. It is going to stay more like a tier 2 stock. I don't think it will be a tier 1 at the moment. At these levels, I wouldn't mind dollar cost averaging, but because there's other bigger companies on sale, I would rather focus on those bigger players at the moment. But once I kind of reach my, I want to say, full position size on some of those other players, DraftKings is one I'm going to come back into. Like I said, I think there's huge potential in this market for this company. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.